Hello everyone, I wanted to bring you up to date on my trading, what happened all since yesterday. I'm very happy how things have turned out. I took that big loss on the German market and I was down 169 when I made the video, and I ended up today with just down 48. So I'm really happy about that recovery. So that was a great recovery from what was sitting at a big loss by midday. And today I am also doing quite well. So today I'm 120. So I've erased the loss completely and I'm up 70. So my account has advanced 70 since that loss of 169 yesterday. So I'm very happy about that, and that's how you need to be to manage your account, manage your positions. Sometimes you need to take losses to keep your accounts more in balance. Having said that, I didn't have to close that position that early yesterday, and I could have probably cut my losses to half if I had just waited until today. Let's go find that loss and where it was. So here we go. Here is that loss. You can mark it. I'm in the German chart now. Mark it. There it is. So you can see I took it long here, and let's see, that was on the 20th of September. I took it long at the absolute top of the market as it was cresting, tapping the top and not going beyond that point. So it was the absolute top. I spotted that as well several days later, and I thought I better cut it, and took the loss. But in the meantime, the market is right here, right now. This line represents the current price. Has come up to way more than half of my where I closed the position. It's actually almost in the ballpark here. If you see where I closed it, you can see that here. That's the beautiful thing about C-Trader. You can study your positions like this as well. This is where I closed it just yesterday. Where is the market now? Come on, cooperate, please. Closed it here. Okay, well, you know the spot. Closed it right here, and the market is all the way crept up to here today. So that would have been, instead of that 173 euro loss, I probably would have been less than half if I would have just kept it until today. And these are decisions you have to make, and these are decisions you have to live with when you're currency trading. And this is simply the hardest part about currency trading. It's a psychological aspect and the battle with yourself, making decisions, being okay, letting go of profits and money, and then being possibly faced with that you didn't have to the very next day, or you didn't have to as much the very next day as you see here. So that's how it goes, and that's what you have to accept. And you just have to shrug it off and forget about it. And after 4 years, I'm getting better at that, and it will probably take you 4 years to master Forex and be calm, cool, and calculated about letting money go like that, when in fact less than about 24 hours later you could have the market was probably 75% back to where that position was. And why haven't I done the same here? Look at all these two positions are very old. Let's have a look. Let's single them out. So we got to go in positions. We'll single them out, and you can see when I open them. So here we are. Here's the two oldest positions. Let's see how we're doing here. Yeah, we're on the German market. Oh, it's okay. I opened these positions on the 4th of September. Oh my God, my first day of trading. First day of trading when I opened this deposit at the discount. On the 4th and the 5th, I took these two positions. So they're very old. And look at the swap. It's now 26 and 27. Every day there's a higher swap, more negative swap being added. have to really look at closing these positions. But look at the losses I'm running on them as well. If I close this now, I will go back down below 7,000. So I'm holding out. I keep expecting a big market drop. I don't know why, but that's my personal opinion. China trade war, things happening with Iran, Trump impeachment. These are some of the headlines swirling around, and I'm expecting a big drop or a cooling down at least. But the opposite is true. It is just rising, rising, and rising, and rising, and rising, and rising. And I've again taken many, many shorts. I've taken a short here, I took a short there, I took a short there, took a short there. These are all very recent shorts. None of them are panning out. I keep adding along, taking my profits, then taking along again. Oh, it crept up a bit more, taking profits, small profits. Oh, it's gone up again, taking another long, and then taking profits, and then another long. I keep being hesitant on the longs because I'm expecting a drop here anytime soon. Anyways, it's not working out to that effect, but I have erased my losses from yesterday and I'm up. So we continue on this way and see how things go. The pound has taken a big dive this morning, so I've taken a small position to say it will go back up. And let's see how that goes. And on the euro side of things, I got a lot of longs in the euro, and that has actually stood up a little bit today. And so I'm really hoping that the euro will end up in around this region, and then I can close these. If not, I will close these anyways. But look how many people are 74% of the traders using CTrader with IC Markets think the euro will go up, and I think it will as well. There's not that much reason for it to be suppressed this far. Another indicator that the suppression of the euro is over are these wicks right here. Tried to go lower, it got rejected. It wicked and got rejected. It wicked down and got rejected. Wicked down and got rejected. Wicked down and got rejected. These indicators right here show that the bottom has been reached of the euro drop. And yes, these all happen at the lower 109s. I mean, we're almost out of the 109s, so that is very, very, very low for the euro. So it's had its bounding, and I absolutely believe that this is over now. So I've just taken a 10,000 euro position here and a 5,000 yesterday. And I've done the same on the euro Canadian. I actually had a double 10,000 position here. One I've closed. The other I'm letting ride to see how things pan out. This should also end up way up here. Yet look, the target has been shifted. The target was just before this video this morning. The target was sitting up in here. They've shifted the target. And I have to say, from this CTrader program, this target is very accurate. I don't know what they base it on, but it's very, very accurate. This right here I found inaccurate. It's people's public opinion. Most traders are wrong. 90% of the traders are wrong. This is very accurate. I see it often meeting this point before it reverses the other way. So that influences me a lot, and because I see it being correct a lot as well. So you know what I'm going to do? While you're all here, I'm going to close that position. I can do it right in the chart. Double click. It's gone. I know that the euro deserves to be way higher than that to the Canadian dollar. But something's going on. It's having trouble getting up. It rises and falls. It rises and falls and rises and falls. So it's having real trouble rising. So that seems to be the trend. And let's not go against it. Another good indicator for the euro Canadian is what the oil price is doing. Look at the oil price doing a massive dive just before this video. All morning I was hyper focused on the DAX. I was considering taking a short in here, especially since the rest are all longs. Look at all this. It's going to be a long time before oil's back up to 60 to make this a positive long. So I'm going to be eating it on this one for a while as well. So I should have been a short just to compensate all these longs. But I didn't, because I expected oil to go up a little bit more. Don't know why. Also because I was hyper focused on the DAX. If I had taken a short here there, I would have banked almost a full $1 per barrel, and I would have been really nice money. But I didn't, and I could consider taking a long here because I think it will return. While you're watching, let's take a long. I do have to set perhaps a stop loss here under this level. Or this level, I will set a stop loss. You can do that very easily by just doing this. That's what I love about CTrader. I can set a stop loss right here. It's so easy to do, and it also tells me the value of that loss immediately. So no calculations needed. I just dragged it, and it tells me I will be down 26 euros if it goes there and gets filled. Same with the take profit. I just love this. So much easier than MT4 and MT5. You just go like this. I want to take my profit back at this high. Okay, that will net me 27 euros if it does. We'll see how it goes. There was a headline. I was looking for the headlines why this dropped, and there was a ceasefire. Saudi Arabia did a ceasefire with Yemen. That headline came out after this drop, and that probably was the reason for the drop. So my account is 7,500. Oh yeah, to the person who asked how I was able to have 30 positions out, I answered it below his question. The answer was that the reason is because I'm 100 to 1 leverage. If I was 400 to 1, 500 to 1, I'd be able to take even more positions. But it becomes too dangerous. It's the number one way to blow up your account. How am I able to take positions? Because with leverage with Forex works like this. Let's take the Euro-US pair. It tells you right here, if I take 0.01, which represents just 1,000 euros in the market, I only need 10 euros of my own physical money in this account to take that position out. Now, if I raise that to 10,000, which all these positions are currently, I need only 100 euros of physical money out of my account to control 10,000 euros. That's what's so nice about currency trading. I only need 100 physical euros to control 10,000 euros in the market. Take that a step further to a whole lot. This is where profits really become interesting if you go the right way. A whole lot means you're controlling 100,000 euros in the market, and you need 1,000 euros for that. Now, if I were to change my leverage to 500 to 1, I would need a mere 10 euros to, no, do I say that right? I would need, well, divide 100,000 by 500, and then you will see what you need of physical money to control 100,000. It goes on from there. What gets really interesting and how you really can build your account and make good money, if you're good, if you're controlled, is take 10 lots. 10 times 100,000 is 1 million. So I can control 1 million euros in the Forex market with 10,000 of my own money. Now at 500 to 1, that is just 2,000. And that is what's attractive. 2,000 euros to control 1 million. But that's a leverage of 500 to 1. Which means if it goes against you, those losses come out of that 2,000 immediately. And at 50, when your account leaves 50% margin, it gets closed for you. So you're very quickly out of that 2,000 if you start to control 1 million with that. And that's how leverage can bite you and will destroy your account. Beginner traders, as I was a beginner trader 4 years ago, wanted to go for the gusto, take 2,000, take 5,000 and take it to 10, take it to 100 and take it to 1 million. That's what I wanted to do, and I blew up each and every account, and now I'm actually, after 4 years of being beaten to a pulp financially, yet not being able to stop with this Forex trading, I'm finally got to concede to what I have experienced, to what I have learned, and just put 5,000 in the account at 100 to 1, which is already very high leverage, and trade positions back and forth, go for a daily goal of just 100, which is 2,000 per month. 2,000 extra per month is fantastic for me. That would be fantastic to have an extra 2 grand a month out of nowhere. That's beautiful. That's all I need. I'm a normal person with a normal salary, with a normal job. that's already a blessing. So that's what I'm trying to do here. I'm succeeding so far, and I will continue to succeed if I control myself, if I control the positions. I don't take out too many positions. I'm failing there, but they're small positions. If I don't change my leverage, if I don't start taking out massive positions with the remaining leverage, being absolutely sure that a currency pair will go one way, yet it goes the other way. And now you're watching the chart going, well, shall I give it 5 more minutes or shall I close down? Well, 5 more minutes, it could go back to the direction I had chosen, but in 10 minutes, it could be double as far. It's stress, man. It's so stressful. And it's a battle between winning money and giving up money. And that's a psychological battle that you can fight only with yourself, and it will vary from person to person how good you are with that battle. How cold can you be towards letting money go that you have already made, or your account, profit you have already made, or profits you haven't made, and it's physical money in your account. This is what makes the trader, and it's different for everybody. And this is the battle. This is the trick of currency trading especially, and of course also equity trading, but we're speaking about currency trading at the moment. So now I want to show you some of the sources I use, news sources, and the economic calendar that you also need to really be aware of that helps you in currency trading. Okay, let's go over to this. I use Financial Juice. It's a free service, and it gives you live headlines, and it really, these headlines are super important because it will show you, these headlines will be the catalyst for the movements in the currency pairs, in the oil, and also the markets themselves. As I mentioned, the oil dropped like a rock all of a sudden. This headline came out right here. This is the reason, because of the ceasefire. But this wasn't even the headline. It was further down by another agency, another service. Where was it? It's already down. See, I get so many. All of a sudden, I picked up a headline saying that the ceasefire headline came out after the oil had dropped. The oil dropped all of a sudden, and I resorted to this, and I went, how come it dropped? And sure enough, the headline came up that there was a ceasefire. But that headline came too late. But it's definitely a source to use. What's going on in the world? What's going on in the markets? And these really influence the up and down movement of the currency pairs. So it's an invaluable tool, and it's free. Another tool to use is within my FX book. Let's first look at my account. I'm up 50% to date since September 4th. So I'm really happy with that. There you can see September 4th, the starting point, and the profit has been slowly growing. Took a dip here, but it looks like I'm advancing again. So, and this is 1 hour old, this update. So that's everything verified using IC Markets, 100 to 1 using the C-Trader. So everything verified there. And now I want to show you the economic calendar. You need to live by this calendar when you're trading currencies. It shows you when the economical reports come out, the importance they have, the weight they will carry on the market. If I'm marking them either low, medium, or high. And this is when you can expect your favorite currency pair to make movements. So it is another reason why I like trading currencies over equities. You can tell, you know the moment when you can expect movements, either up or down. You can decide to stay out of it completely by closing your positions and seeing what will happen next, or you can decide to participate with very small positions. But you know exactly the time these reports come out and what you can add, and it will provide volatility. For instance, in the U.S. market, so your U.S. and U.S. Canadian, pound U.S. will be affected at 2:30 today as this series of reports comes out. They're all marked as high, so you can expect the currency pairs to start moving. So you've had warning. You can prepare. It is not all of a sudden a headline saying the ABC company, the CEO has quit, and that affects it either positively or negatively in the stock price. But that guy has quit, the market has taken it on, and you're reading the headline after. So here, I know when the headlines are coming. I know when the movements are coming. I know when the volatility is coming. I can choose to participate. I can choose to be out of it. The best thing is to be out of it, actually. I have my account in both directions from tiny positions, so that I can just grab 5, 6, 7 euros on these big movements. The best advice is to be out of it entirely and only trade during their quieter times. Anyways, that's the economic calendar explained. There are many sources for the economic calendar. My FX books has one included. I think it's the best one because when an event hits, you'll get the results absolutely live and immediately popping up here. So they pop up here, and you can read what the result was of the report, if it was negative or positive. So there's no other need to use an economic calendar other than my FX book, yet many sources provided, such as Daily FX, also a great source. Used to use it a lot, but I only use this economic calendar. So those are my sources explained. Hopefully I explained how I was able to take 33 positions out with just 5,000 euros. Hopefully that was explained properly, and thanks Francis for continually watching my videos and making comments. You're very helpful with your comments. I appreciate reading them, and I take great value in your words to keep myself in check. So I'll conclude my review. I hope you liked it. I'm getting a little bit more subscribers. I'm getting comments by other people. I hope to keep this ball rolling to help people. I'm not making any money on these videos because you need 1,000 subscribers YouTube to start making money on your videos. So I'm not making any money. I'm doing this for fun, to help others, to help myself by doing a public account. Perhaps I will be a better trader by putting it out there publicly. At the same time, I'll help new people, hopefully, get a nice community going, which I will be proud of to have created. And that's why I'm doing this. And I hope it keeps going. I'm monitored for a couple more weeks, do 10 to 20 videos. If there's positive response, I'll keep going. If not, I'll stop making these videos and I'll trade privately. That's it for today. Have a great weekend. And I look forward to your comments. And we'll speak to you next week when a brand new trading week begins. Goodbye.